Hi everyone, my name is Piterpakulski. Today we'll continue building a financial model for a manufacturing business idea, and today we will be focusing on cash flow statement. We will be building the cash flow. So for any business project, no matter what it is, you need to build some environment where you will be able to see the operating activity, investment activity, financing activity consolidated. There you will be able to see how much money is needed, when the money is needed, what is the payback period, how the cash is being generated by the business, how much cash has been generated by the business by this or that moment in timeline. So it is some kind of a breadth of your business idea, and all this is about the cash flow statement. So today we will be consolidating what we've done before into a table where you will be able to see all that stuff. So first of all, let me just give you a brief overview of what we did before. So we have a manufacturing model. So we have product A and product B. They are being produced on line number 1 and line number 2. So each line has a maximum of 3 shifts, which we can switch on and off. We can switch on and off products, lines. The tutorials we were describing raw materials that participate in manufacturing process. Then we specified the raw materials which participate in manufacturing of product A, product B. Then we were modeling investment plan for our business idea. Then we were modeling the payroll linked to the manufacturing line number 1, line number 2. So by the way, if you find this video valuable, you may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. At the end screen of this video, I will be sharing the link to the playlist where I will put all these tutorials from scratch. And when we will be done with this model, I will give all the links to all tutorials in the description of this video as well, so you can watch all the tutorials one by one. So then we covered payroll, fixed payroll, another type of payroll. Then we were talking about direct payroll linked to the amount of units produced of product A and product B. Then we started talking about the types of customers. We moved to revenues. So assume we have different types of customers. Different types of customers have different pricing. They have different types of payments. Then we talked about electricity costs. Then we talked about the direct expenses linked to the amount of raw materials needed for the manufacturing process of product A and product B. Then we were talking about the direct expenses linked to the amount of shifts of line number 1 and line number 2. So that there are different types of direct costs linked. Then we calculated costs for pallets, packaging costs. Then we were modeling fixed expenses. So blue cells are the inputs. Then we were talking about the loan. And now it's time for us to build the cash flow statement. So let me copy. Just give me a place. I will need some place for texts later. So this will be a cash flow. This will be a cash flow statement. And let's start. So the first rule is that we do not put anything, any values inside the cash flow statement. So we only gather the data inside this statement. So we are not manually adjusting the formulas. So we are just putting, we are just linking the articles from the model above. So I will be showing you how it is done. So now let's first of all start with revenues. So you will see that I'm not putting, I will not put any numbers directly into cash flow statement. So let's start with revenues. So what I'm doing now, I'm going up, and then I start traveling through the model, searching for the green lines for the revenues. So we are close. So here are the revenues. Now I'm extrapolating these formulas to the right. Now let's move to direct costs. Direct costs. So now I will do the same. So I'm going up, traveling, searching for direct expenses. So these are raw materials. So these are the inputs for raw materials. Then we have some calculations for raw materials, and I'm searching for the red group of lines for the raw materials. I'm picking these lines. But these are not the only costs, direct costs that we have in our model. I will go back and continue gathering the data. So I was somewhere here. Raw materials, this is the investment plan, I don't need this at the moment. Payroll, this will go later to payroll. Shift, this is the payroll. Then payroll. Direct payroll, the same. These are the revenues. Let's skip it. Then electricity costs, we are picking. Electricity, then let's go back. Electricity, then direct expenses linked to raw materials, so we will need this as well. direct cost. Then we are moving back. We have also direct expenses. These are linked to the raw materials. This one linked to amount of shifts. Then we move forward. Then we have the pallets costs. And I think no more. So these are direct expenses. I'm making total. Now let's extrapolate this formula to the right. So now we did revenues, direct costs, and now let's move to payroll. So we have different types of payroll. So let's go up. So first of all, shifts payroll. So let's go completely from the top. So this is where the payroll starts. So this is shifts payroll, line 1. So this was line 486. So this was the end of payroll of line 1. Then we have payroll, just a second, line 1, here are line 2 as well. So now we will go to the fixed payroll. So this is line 1, line 2, then we are moving to fixed payroll, then payroll fixed, then payroll direct to amounts of units produced. We're taking these values. So this is the payroll. Now I will extrapolate these lines to the right. Now we need to move to fixed costs. So fixed costs I will pick from here. So here we have the revenues, data, group, then we have direct costs, then we have payroll. Let's copy this and let's move it here. Let's call it taxes. So let's collapse fixed costs. Now let's collapse payroll. And let's move to taxes. Let's create a small block of inputs. Tax name, tax name. Here will be the rate. So first of all, for example, we have revenue tax. revenue tax, then payroll tax, profit tax, asset tax, so there these cells will be the input, so I'm coloring it with blue. So revenue tax, for example, will be 4%. This will be percentage rates, will be 4%. Then, for example, payroll will be 7, profit will be 5. You can adjust, put the data, put the inputs the way you want. Asset tax, for example, we will be paying $6,000 monthly, and so let's place taxes here. So the revenue tax will be revenue multiplied this value, this rate, payroll tax, we have payroll multiplied the rate, profit tax, we will do it a little bit later. We will need add loan payment for profit tax calculation. So asset tax will be asset tax value multiplied on whether we have or do not have an operating activity. So we have project timeline, production 0, 1, 1. 1 means that we do have an operating activity at this moment. 0 means that we don't have at this moment. So I'm pressing enter. 3977. So 3977. Now we'll extrapolate it. So these are taxes, and now we are moving to the the end of the first part of the cash flow statement. So this will be the result from operating activity. I will color it with yellow. So this will be the revenues minus direct costs minus payroll minus fixed costs minus taxes. Now I will be moving to the investment expenses. So I'm going to the top. So as you can see, I'm not putting the values directly to the cash flow statement. So cash flow statement is 100% automized table. So this is the investment plan. So reds are expenses, greens are revenues. So the logic is very comfortable to make us easily find the needed lines for the cash flow inside the model. Then we are creating the second yellow line. This will be the result from investment activity. I will take this value with an opposite sign, because investment is an outflow in the majority of cases. In our particular case specifically. Now let's collapse it. Now let's move to financing activities. So the first line will be equity. So here we describe how we are going to finance our business idea. So for example, so we can use this as an input. Maybe this will be the only manual line inside the cash flow statement where we will be putting our money that will be using from our pocket to finance our business idea. Then we are adding loan inflow, then principal payments, interest paid, then I'm gonna extrapolate this formula to the bottom, to the left. So here we can see the loan. Then I'm adding the last yellow line. This will be the result from financing activity, and the formula for that will be this plus this minus this minus this. So now when we added principal payments and interest payments, we can calculate the profit tax. So the formula for profit tax will be if this value minus this minus this minus this minus this minus this minus this minus principal payments minus interest payments, if this tax base will be more than 0, then we will pay the tax. We will take this value and multiply it on the tax rate. Otherwise 0. Then we are closing brackets. Then we are extrapolating this formula to the right. Then we are moving, so let's group it. Data, outline, group. Then we will write cash balance at the beginning of period. So this will be 0 here, and then we have cash balance at the end of period. This will be the last line of the cash flow statement. So this will be the result from operating activity plus result from investment activity plus the result from financing activity plus cash balance at the beginning of period. Then we put this value at the cash balance at the beginning of the period for the next month. Then we will extrapolate this formula to the right, and then we have this line, accumulative formula. Now we are going to extrapolate these two cells to the right, their formulas to the right. So now we are done with the cash flow statement. So we've converted a huge model into a small table where we will be able to see the structure of revenues, expenses, and now we need just to make a small check whether we maybe we forgot some add some lines of revenues or expenses. I will be just going through red lines and green lines and to say whether they play part in cash flow statement or not. So what I'm doing usually, scrolling, so red line, formulas, trace dependencies. So this plays part. Remove arrows, then investment plan, place parts. This, trace dependencies, place, place. 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 Play. Play. Let's play. Fixed costs, play. Loan inflow, play. Principal payments, interest payments. So I think we're done with cash flow statement. So maybe this video was useful for you. You may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. At the end screen of this video, I will be giving you the link to the playlist where I will be keeping all these tutorials. And when I will finish this model, I will keep all the links on these tutorials in the description of this video as well, so you can watch all the tutorials one by one from scratch. So like, share, subscribe guys. See you next videos. Thank you and bye.